What's up traders, welcome to Failure to Displace. Slightly different video than normal today. We are looking at the New York AM session on NAS100. I wasn't able to get any trades in the London session this morning. However, this did present itself in the New York AM session just prior to the New York Stock Exchange opening. And we had to ride this for our potential trade through a red folder news drop as well. Let's jump into the high time frame analysis now, see how this setup presented itself. So we'll start the analysis off on our 1 hour time frame again, just looking for our 1 hour swing highs and swing lows. So prior to the New York AM session opening, we've got sell side liquidity in the form of the current London low. Just below that, we do have yesterday's low, which was put in the Asia session from yesterday before this rather large pump up. Obviously, we have yesterday's high as buy side liquidity. It's kind of relative equal highs here, so we did just sweep Thursday's high before pulling back, and then we do have a high in between the Asia session, the London session and the New York AM session opening, which would be a nice target. Again, kind of three peaks here. These are almost all relative equal highs, so this looks like a pretty strong draw on liquidity to me. 1, 2, and 3 here, so that's all buy side liquidity kind of pulled up at this point. So we've got red folder news happening at 3. It's not 3 p.m. though, that's 3 p.m. UK time, which is 10 a.m. in the US. So we'll do our line there for red folder news. We want to be taking trades 15 minutes either side of the red news. I will take trades before red news and after red news if we are getting our setups presenting themselves. Let's drop onto the 15 now. The 15 minute is going to show us our session liquidity tracker, which is these extended green lines showing us untapped levels of session liquidity. These obviously do correspond with the hourly swing highs that I've already marked out. Specifically looking here at the Asia high, which is the current daily high. All of this liquidity as well, which is interesting to note, is dropping into a 15-minute fair value gap. So the New York PM session yesterday has displaced lower, leaving a big bearish fair value gap. And we do have liquidity into this inefficiency, so we could potentially come up in here for a reversal to take out our stacked sell side liquidity that we put in over the past week or so. There's no bullish fair value gaps on the 15-minute time frame here, so there's nothing really to frame a long trade off right now. We can keep an eye on where optimal trade entry is. So we're just coming down into optimal trade entry at the moment. So a potential sweep right in the middle of the range, so there's no decision there. I don't have a bias either way at the moment. I'm going to be looking for a sweep of the high or a sweep of the low before taking a trade. Drop onto the 5-minute time frame. We'll start scrolling through price action now. So coming into the New York AM session, this is going to start at 8 a.m. So as the session opens, we're making a quite aggressive drive down towards the London lows here. So the sell side liquidity from London low. Taken that. So as we've swept this liquidity, this is now valid for me to look for a long position after this sweep of liquidity. So if we are looking for our reversal model, let's map out the actual market structure. We've got a high to a low to a high, so a little bit small price action there, straight down. This, I'm not going to class this as a swing low, swing high. It was one candle that created that. So although this is a swing high and a swing low in itself on the 1-minute time frame, because it's just one candle and it's a massive indecisive candle. I mean, a doji, it opened at the same place it closed. We're not going to place any significance on that candle. We're going to look at this candle, which means that we need to have a break of this high for me for a valid break of structure. This would be our breaker block. So the last up closed candle for creating the new swing low, which would be a retest of that area if we're going to get our unicorn entry based off this breaker block, and then a continuation higher, obviously looking for that buy side liquidity that we've marked out above us. So that would be the price action that we're looking for. So we need a strong buyback now with displacement through this level. Obviously, we've got a stack of bearish fair value gaps at this point, so we're going to need to see these bearish fair value gaps being traded through. Leaving bullish fair value gaps in their place would be nice. I'm just going to change the fair value gap indicator because this one doesn't work on replay. There we go. Right, let's have a look at what we've got. Buyback, we've closed through this bearish fair value gap, so this is now an inversion fair value gap. We've obviously broken that minor structure inside there, so if you were trading that as an actual break of structure, you would have a breaker block at this point with a fair value gap, a very small fair value gap inside it. I'm not trading that, there is definitely not enough displacement. And I have no conviction in that candle whatsoever. Continuing higher, so we can see we are getting a good move higher now. Closing through these bearish fair value gaps nicely. So we have broken this structure now, so we have broken above that order block. As the order block has failed, instead of being resistance, it can potentially act as support. So this is going to be a breaker. Key points in time that we're looking at is the open of our 15-minute candles. So we are kind of in between at the moment. 8:30 would be our next candle. Continue higher. So we've left a fair value gap and a fair value gap inside this breaker block. So although these are not massive displacement candles, obviously they are grouped together with a pretty strong move upwards. So I would class this as displacement because it's one continuous move more or less higher. So I think that this is a valid entry. We are obviously before the New York Stock Exchange open, which is at 9:30. So we do get a massive injection of volume at 9:30. Getting good move, so a good strong move higher. No entry at 8:30. So we're going to be looking at 8:45 as our next 15-minute open. Continuing higher, we jump up to maybe the 2 minutes, see if we get a clearer view of this. The breaker block is still the same on the 2 minute time frame, still in the same position. Again, we can see that strong move through this area. In fact, we haven't broken structure yet, however, so we do have, this would be a mitigation block on the 2 minute time frame. That would be a breaker block on the 2 because there is a swing high just there. 3 minute. Not seeing anything particularly interesting on the 3. Stick to the 1 minute because that's what we like to take our entries on. So we're getting nice consolidation here. So we've had a strong move down, we've taken liquidity and a very strong buyback, consolidating now before the open of the 8:45 candle. This is nice building liquidity, relative equal lows. So we've built some liquidity here on these two relative equal lows. Obviously we have some relative equal highs here, so we could have a move down into our breaker block having swept liquidity. So this is quite nice to see this. 8:45. I'm going to be looking at 9 AM now. If you want to trade with a 3 to 5 pip stop loss and achieve maximum risk to reward from your setups, then you're going to need a broker with super tight spreads and zero commissions. If you're from the UK like me, I highly recommend Trade Nation. The fully regulated, offer zero commissions and spreads between 0.2 to 0.6 pips on all of the major instruments that we trade. And also, if you're in the UK, you can open up a spread bet account and your winnings will be tax-free. Yes, tax-free. Check them out in the link in the description below. And for my US colleagues, you need to go and check out Blueberry Markets, who are fully regulated in the US, have spreads from 0 pips, yes, 0 pips, and offer amazing customer service. Partnering with a broker that offers killer spreads means that you can execute with precision and confidence, not worrying that the broker is going to randomly open up the spread and stop you out of a winning trade. Links are in the description below for more details. So nothing at the moment, just engineering liquidity in this zone. Swept the high. So an aggressive move coming down now, so we have an engulfment coming down. Again, we've swept London low, so because we've swept London low and we are closing back in the range, my anticipation is that London high will get taken. So I'm still holding a bullish bias at this point, despite this being a large displacement candle. So I don't want this to scare me out of the market, because my thesis is a failure to displace below the London low. So it's not come down for any further liquidity, it's pulled back in the range. So until we take another significant level of liquidity, which from our earlier analysis was the London highs, that was our last 1 hour swing high, I'm not going to be converting to a bearish bias at this point. I do think that we need to take the London high. We can pull our fib because we are coming to a crunch time. We have 9 AM, so as I mentioned, stock exchange opens at 9:30, so we really want to be in position for the open if we can. We can see nicely now that this breaker block is just into a discount as well. So it's into a discount of the range, just above optimal trade entry. So we're pulling back closely, given that. So this is 01, 02. I'll set my entry at this point. So I'd like to get tagged in kind of in the first few minutes of the candle. So this can tag us in around this time. For a stop loss, so I'm going to want my stop loss. I'm going to need, so I've got some fair value gaps here. So there's a couple of PD arrays in there. I have this order block. So there's another PD array, and I have the breaker block as well. So there's 3 PD arrays, and then we have optimal trade entry just as an extra confluence at this level. So I would place my stop loss just below optimal trade entry, kind of 7.5, 7.7 points for a stop loss. We've obviously put in a high here, which would be a good place for a take profit 1 if we do pull back. I mean, that's already 3R. This entry then will be well before the news at 10 AM, just coming up before the 9:30 open. So let's just see if this does get tagged in. Not quite. We have a rejection respecting the bearish fair value gaps. We've swept our equal lows at this point. Not quite tapped the top of the breaker block. So we're not going to get our entry within the first 3 minutes of the candle open. The next open is 9:15. Pulling back, closing through that bearish fair value gap. So we're looking for somewhere around 9:15 if we can. So making another move down. There's the 9:15 candle. 16, 17. So we're just coming up to the 3-minute window. This is where I would like to get tagged. This is an additional confluence if we get tapped in at this point. 3 minutes either side of a 15-minute candle open. Ooh, not quite. Not quite. There we go. So we do get tagged. Leaving it a little bit longer, so it's 9:20. So we're 5 minutes after the candle open. Again, we can look at this kind of as the power of 3. We can have an accumulation, a manipulation down, and then a distribution higher. So this really large bullish engulfing candle after tapping the top of the breaker block. A nice entry. Strong move, so literally zero drawdown at this point. As the 9:30 open comes in, we get that injection of volume to take us to our TP1. So 80% of the trade is taken off at this point. So we're now risk free. I'm not adjusting the stop loss. I'm leaving the stop loss where it is because price may come back, especially given we're into the 9:30 open. May come back, at least test optimal trade entry before going any higher. I do believe that we need to have a run on the London high because, as I mentioned, sweep of the London low, failure to displace. Let's take the London high out. So let's see how this pans out. Nice, strong move. So we're digging up into this orange shaded box is our new week opening gap. So price has drawn into the new week opening gap, just failed to tap 50% of it and had a slight rejection. Tap the 50% of the new week opening gap. We have not taken the high yet, so we still do have that untapped buy side. So this is our final target. 5.6R, taking out the London high. Strong bull pullbacks. This is one of the difficulties of being in at the New York Open. We do get a very aggressive move, can often whipsaw around. Ooh, back into our entry. Not stopped out yet because we haven't moved stops to break even. So we'll just take 80% of the trade off after sweeping this swing high. Leave the stop loss where it is because we do anticipate we can get a run back into the entry before making the move higher. This is that move. Strong rejection, going back up again. We've not hit our stop loss yet, which is a good sign. We know that we've got red folder news coming at 10 AM. We're risk free on this trade, so we don't have to worry about the red folder news. I wouldn't be entering a trade at this point. I will hold a trade through red folder news if I'm already risk free. If I wasn't risk free at this point, I would be going risk free prior to the news dropping. Bringing my stop to break even. Going back into that breaker. Ooh. Not quite hit the stop loss, so just to the 6.6, so just below the zone. See if we get tapped out. Not quite. We're giving ourselves a couple of points just below the optimal trade entry. We do have that inversion fair value gap at this point. So that was a bearish fair value gap that got traded through. So this is now a bullish inversion fair value gap to act as support. So we didn't quite get stopped out. See if we get another dig into that before the news. This is the 10 o'clock news. So we survived. So it wouldn't have mattered if we did get stopped out at that point. If you had placed your stop slightly different, we were already risk free anyway. To see what we can get out of this and see if our analysis now going to the London high plays out. So we can see now bearish fair value gaps are getting traded through. We are leaving a bullish fair value gap. Getting a bit of a whipsaw down. Not the cleanest of price action at the moment. Just kind of in this larger range. You would have liked to have seen more volume, to be fair, especially after a red folder news drop. There we go. So I'm not quite sure what happened at 10:30, but we do get an injection of volume 10:36. Drive up, sweep the high. So we've taken that liquidity, bagging a 5.67R trade. So really nice, solid 3R to go to our take profit one. Didn't get stopped out with our stop loss in this instance. Potentially could have done, depending on how much room you gave that optimal trade entry. Maybe it would have been better to use the stop loss below the inversion fair value gap, the extra confluence. Either way, the trade analysis did play out. We weren't taken out of the trade at the New York Stock Exchange Open, and the red folder news didn't swap us out of the trade. It did drive us to our liquidity level, which was the London Open. A really nice solid trade. Hope the analysis was useful. If you did enjoy the analysis, please give the video a thumbs up. Any questions or comments, leave them down below. It'd be great to get your feedback. And likewise, if you're enjoying these videos and want to see more of them, consider subscribing. I'm dropping these more or less every single day. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.